Hello everyone, welcome to the Ichimoku daily analysis for gold for Monday, September the 20th, 2010. Well, a continuation of the trend to the upside, and we have the market making a series of higher highs and higher lows. Today's candle is no different. Small worry for this market is that we're starting to see very small bodied candles as the market is making these new highs, and that tells us that the buyers are making only a very small amount of net bullish progress on the day between the open and the close, and that's in contrast to some of these larger green bodied candles that we're seeing. At least the bodies of the candles aren't red, so there isn't any real bearishness coming into this market, but there is a bit of indecision as the market's trading up around this 1280 region, so there is potential for that area to hold as an area of resistance. Now, these type of candles are spinning top candles, and we can see the shadows on the top and on the bottom, and that represents downside price rejection and upside price rejection, and that's why there's a lot of confusion in the market. So we have the bulls not being very strong, but the bears not being strong as well. So we have a good battle between the bulls and the bears, and it's a very indecisive, these are both indecisive type candles. So there is potential for the market to come off and change trend to the downside. Now that doesn't mean that the market will collapse totally. We should look to areas where the market might find support if it does, and I'm not saying that it will. We do need confirmation of that. But if the market does come off, obviously this area around 1260 or so, roughly up to about 1266, is an area that has previously held as resistance, so we should look to that area as holding as support. That also coincides with the area that the Tenkan-sen is trading in at 1260, so there is another reason why that area would potentially hold as support. Just down below there we have the Kijun-sen, which will offer us support at around 1247, and then certainly around 1240 where the market previously found support as well. Down below there we have the cloud or the Kumo, and but that's a fair way away from where the market's trading at the moment. So in overall terms, the market is very bullish. It's trading up above the cloud, so in the long-term time frame the market is bullish, and also bullish in the medium-term time frame and the short-term time frame, because we're trading up above the Kijun-sen and the Tenkan-sen. The Tenkan-sen is also trading up above the Kijun-sen, which is another bullish indication. And if we look across at the Chikou span, that's also trading up above the corresponding price action, which just adds to this bullishness in this market. Now, the market is looking a little bit overextended. It is trading a long way up above the cloud, and markets act like rubber bands, and they tend to, if we have a lot of bullishness in the market, they'll tend to get a long way from the Ichimoku indicators, and then they'll bounce back a bit like a rubber band. So if it's overextended, it might come back and look to find support around some of these areas. There isn't any major indication yet. If these lows are taken out of the current candle with a lower high and lower low, then we should look to some sort of a short-term retracement back to some of these support levels. Now, just looking at the angle of some of these Ichimoku indicators, the Kijun-sen is pointing up very, very sharply, reflecting this very strong trend in this medium-term time frame that the market's been in. We can see these series of higher peaks and higher troughs that the market's making, and it's been making those higher peaks and higher troughs for quite some time. So a very, very strong trend in the medium-term time frame. So we know that those trends don't last forever. There is a possibility that the market may react and may sell off once again. But as I've said, we do need evidence of that. So for the next day's trading, obviously we do need to watch the low of the current candle, but certainly watch the highs for a potential continuation of the market trending up.